Okay, let's jump straight into it. The big one to talk about is obviously sort of DXY's price action with US CPI last night. Um, it beat expectations. I mean, it was 3.1 previously, expected for 3.2%. It came in at 3.4, and the reaction was kind of pretty much as expected. I mean, thought it was going to go up. They were sort of supposedly positioned, even though despite it, they were sort of selling down prior to it. But you see this big thumping candle coming up through the middle here. That was the reaction of it. If you jump down onto like a lower time frame, like sort of one of these 3 minute ones, the price action around this is quite interesting. And there's a couple of things to sort of unpack from this because this is the initial push of the news. And as you can see, this is on a 3 minute candle. I mean, you can go lower if you want, but whatever. That's almost 0.5% move in 3 minutes. And then the return, so the sort of rebound on that is sort of coming straight back down over here. I mean, DXY always loves a good sort of sell down, but I think the interesting sort of part about this is that, I mean, if you look at this just briefly, that's coming back down. Look at that, 78%. DXY loves the 78%, and then sort of continuations. You think, oh, here we go, it's coming right back down, boom. But I think this move here, particularly, excuse me, apart from being somewhat telling of sort of the price action to come, I think sort of, at least for myself particularly, sort of threw me off a little bit because remember you had NFP last Friday, and where's NFP's price action? Here. And that was NFP's reaction here, and that flew up, and then of course came back down, and came back down, and went full, and absolutely got smashed to the bottom side. So I think particularly like a lot of people, and myself included, was sort of considering whether we were just going to see a complete repeat of that. So we get back onto a realistic time frame. Okay, sorry, spending time going around thing because you got to remember, sort of coming into this. I mean, that's quite clearly a bit of a downward channel sort of thing, a very rough drawing of it. But that is realistically the way we were coming into it, particularly the last couple of hours coming down into it here. So there wasn't, it wasn't sort of too far-fetched to think that maybe we go up and then people just continue selling into the market as they had been doing prior. So that sort of came back down, but of course, we saw it subsequently, it sort of pushed back on. And if you have a look at sort of like, equity markets, gold held up very well. Aussie bounced, I think it was 40 points off the lows. I think we dropped, I have to check it in a second, but I think we dropped, I think 50, 60 points off the news at a 40 point bounce and then back down lower and then blah, blah, and it was all over the place. And as you can see, the price action here was just up, down, up, down, up, down kind of thing sort of through the next couple of hours. It did obviously sort of started to make this little triangle setting up here, but it failed to sort of continue with it obviously, and as it broke through there, it never really sort of looked back. So, and obviously we're back down right near the lows now. So DXY sort of just coming online now. DXY is a bit of a funny one because they're like, I trade through IG and that comes on at 12 o'clock, but certainly through on TradingView, this TVC, you start to sort of get a bit of a picture from 11:45. So it's always good to sort of get a bit of an inside look at sort of where it's going to go. And we're obviously seeing a little bit of a gap down now, but if this sort of shoots back up here, well, I call that the actual 12 o'clock is where I call the open with it all, but interesting to sort of see this little bit of sort of action before we get into it. Obviously, got the alert set up there if we do decide to sort of continue to the downside. So yeah, it was interesting. So as I said, look, equity markets held up very well. This bounce period through as the sort of DXY was coming down through here, equity markets, you know, I think they pretty much undid 100% of the move straight away. And then obviously people are like, oh look, they're just buying up risk, they're taking it up, and then that sort of shot back down. So it was really whippy. It was just all over the place. And obviously, you can see how it's sort of settled now a little bit as well, and sort of equity markets continue to sort of push on. So DXY from here, look, yeah, here we go. There's nothing that's real. It's a bit hard to tell with these big sort of whippy moves as to sort of what you'd really want to call a legitimate line to take. Like as you saw, I could have put down this earlier one down here, but I'm not too happy with this. I think I'm just going to stick with the horizontals with DXY for the moment. That's obviously on a lower time frame, and we just got the alert going off now, so breaking lower. So we're down underneath those lows from last night. We had that little bit of a sort of resistance point over here, so some price action expected around this point. If we drag this one down here, lower level here, just coming down to 102, sort of 18, 20, that kind of area. I'll get onto Aussie in a second because there's an interesting sort of bit of price action with Aussie as it's sort of recovering. But for me at the moment, DXY, this it looks like, obviously it's tried to go up, it's tried to push, it's had a big solid push here, it's come back down, it's absorbed it, it's gone for its second effort, just unable to do it, and it sort of seems to be coming back down to the bottom side here. So I'd sort of be cautious to be anybody sort of buying dollars at the moment. Realistically, we're just in this big range still. I think that's the best way you can sort of put it. These are all sort of little intra levels and that they're sort of looking at, but I think realistically, you're still looking at Friday's wicks are yet to be taken out. And if you look at this, like sort of, this is stepping back and this is going, okay, let's have a look at this at a 4 hour. Well, we're still just ranging here. So till we actually get a break and a close down under, let's call it 102, because obviously that's our lower support just here, or a break and a close above 102.70, I still think we're just going to be subject to back and forth choppiness. So yeah, I really sort of thought we would have seen a bit more of a sort of decisive, clear decision on where the market wanted to take things after this CPI print. But I did hear actually an interesting comment, which I think sort of rings very true with this as well, because I mean, the whole idea with sort of CPI is that, well, sorry, not the CPI, but with the strength of these sort of currencies is that they want higher interest rates. Like, that's what's going to garner strength and people wanting to sort of put their money into that currency and that because they're going to get a better rate of interest with it all. So textbook, if the interest rates are going up, there's less likely chance that they're going to that they're going to cut the rates sooner rather than later. That's the sort of talk with USD at the moment. But that is exactly it. That's the talk. They're not talking about, okay, are we going to raise the rates? The time for raising rates is past. That's not even a question anymore. At the moment, like, maybe if they sort of get some sort of big sort of, big sort of tick up sort of the next 2 months in a row and that, maybe that'll come back on the table. But, that's not right now. Right now, the conversation is around when are they going to cut rates? And yes, they got a higher print. So that means that, maybe the cutting of the rates is going to be delayed a little bit, but they're not sort of going to go, okay, we need to raise rates because of a 3.4% or a 0.03% tick up into CPI. So I think this is why you've got this textbook reaction here. Like people have gone, oh, it's higher rates, bang, they're not going to be cutting. So, okay, let's buy it up. But then market's going, hold on, wait. Well, okay, maybe they're not cutting, but they're certainly not they're not adding to, like they're not going to be sort of raising the rates, and that's sort of what sort of caused this sort of shoot back down, and basically just back to where we started. We were coming down, we're still in this sideways groove here, and really not a great deal to be taken away from it. A couple of sort of whippy moves in that. We had gold down to, I think, sort of like 2014 supports. We had Aussie drop 60, 70 points off it all and recover, 60% of that. So, it'd be interesting to sort of see what they do through Asia today. If we see a sort of continuation, typically if you see this kind of move up and it gets undone like this, you can expect the sort of price action to keep flowing down to the bottom side. But we will have to sort of wait and see because obviously it's coming into this little support here now. If we jump down to the one, we're seeing it again act as support. Basically just as we thought it would be. So, you could see a little bit of a tick up here. We've only got a couple of seconds till we got the new hourly sort of candle ticking over. You might see a quick little push up, close the thing, and then sort of come back down to the bottom side here. But certainly not any sort of major takeaway with sort of what's going to be happening next from this CPI. We did see the reaction was very strong, but equally people were just using it as an excuse to sort of sell into. So, all right, let's jump across to Aussie. Aussie, because you can see here, bang, came back down. These are H1 resistance, that's an old school thing there, isn't it? But yeah, these are our sort of daily supports down here. And as you can see, it got absolutely hammered. The bounce on this, though, if you sort of jump onto the lower time frames with this one, look at the bounce on this. Yeah, I always like, they said, a lot of false moves up to the top side here. It sort of like blinked up here for like 2 seconds. So it gives you to say, whoa, it was going up. There was nothing here. Like literally blinked up here, and then sort of that would have taken out all the sort of short stops, and then just went bang down over here. But this is on a 2 minute candle, and as you can see, this sort of drop here. So from the news, it dropped, you know, zero point 0.7, about 50 points or so. But to bounce back up to the thing, you know, within 4 minutes, it bounced up 42 points. So that's a big sort of bounce, like for people sort of trying to take it up over here. But then, of course, you know, drift, 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 drift. And this is just what we sort of saw. So as you can see, it sort of had this little rounded bottom. And this is obviously around the time that, you know, DXY starts to sell off, equities start to sort of pick up again. And we're sort of seeing it push back up over here. So got DXY coming online now. And we're sort of seeing, you know, gold push down a little bit. We're seeing obviously Aussie sort of come under a little bit of pressure again under the 67 handle. So you'd want to sort of get Aussie back up, certainly back up above 67. Let's come up into coming into the overboard. This is on the 1 hour, a bit of a bearish candle here, and obviously a little bearish open here. You want to stay above I would say you want to stay above 76 realistically, but you know, you can see that these areas here have been sort of quite strong supports. So the fact that we're back up into this area, I think downside we may sort of see again some support coming in around this sort of 80s, which is basically just the same story that we've had all week with the Aussie. And if we do look for anything sort of on a topside move, you know, you could be sort of seeing again, this could just be a little sort of fake out, um, or fake out, trap, this kind of stuff. I've traded Aussie a couple of times. It was going in an opposite direction actually. This was, I can't remember. I think maybe early or sometime through last year. It could have been the year before. I can't remember exactly. And it was definitely, it was moving to the downside. And it had opened, and I remember it's sort of like if you sort of actually if you invert this, it looks exactly the same. So you got your weekly open level here, and this is your open here, and it's sort of come at it, tried to go through, no, rejected. Well, actually, this is the open here. So it started off, tried to go through, no, back, tried to go through, no, back, tried to go through, no, back. And then a big one up here could be just a big liquidity grab. If this comes back down here, and particularly this 67.30 we've been looking at all week, but you know, weekly open of 67.17. I thought it was 24 actually, but anyway, I'll double check this. If it does happen to sort of go through this point here, that's going to be a very bullish move. And as I said, I've seen this before. It was more going to the downside, but a couple of knocks on the door, and then it eventually went through. And that, I can't remember how far it ran. I'll have to sort of look it up, but that really sort of had some sort of energy behind it. And I think that moved like 200 points or something over the next week or so. I'd have to sort of double check this, but yeah, certainly if it can get back up there, I know it's a sort of bit can seem like a little bit of wishful thinking, and obviously always looking for topside moves here, but you have to sort of respect how much that US dollar came down after that move. Like, you know, if they wanted to run it, I mean, we saw it sort of the last quarter of last year. Sorry, not the last quarter, I mean prior to the last quarter of last year, when USD was just on that insane run. I mean, you've seen the power behind USD. When it wants to move, you just can't stop it. It's unrelenting. They just buy dips like before they even sort of half move down. And there we go. Put this one up. So, you know, if they wanted to run US dollar, and you know what I mean, textbook, that could have been a good excuse for them to run the US dollar. Uh, you know, that was their option. That was their time to do it. And obviously, the market as a whole used it as a good chance to sort of sell into. So, you know, if it takes out the lows, um, yeah, I wouldn't want to be sort of long on US dollar. So that's just my sort of feeling on it all. So I have to sort of wait to sort of see what happens through Asia, because obviously this is at the moment just a bit of a bounce up here. If we look at this, where are we at? Probably coming around that 60, yeah? Yeah, so we're coming into that 61% zone here. So again, if you take back up to the 78 is pretty much where the news dropped, as it sort of came down there. So yeah, we'll have to sort of see what they do through Asia, but certainly if we go through the top side over here, um, that'll be sort of very bullish. This was a very big drop down. So again, we were coming into this as a negative, so you got to keep this in mind as well. Just to contemplate both sides of the coin, and not just obviously always looking for the top side moves. I do think that Aussie does have a bit more of an effort up over this area, but you got to wait for the chart to really sort of tell you that that is happening, and it's not just sort of somewhat wishful thinking. All right, cost to gold. Gold's just all over the place. It is still sort of trying to go sideways. Gold held up very well, actually. I'll give it that. Sort of like through that first period when the news dropped, it was this period just here. And as you can see, while sort of everything else was dropped, like we did sort of get the drop down afterwards. Sorry about that, still just slowly dying. Um, It held up very well as the news and USD was first running. I mean, as I said, look, afterwards it did give way to it all, but through that first period when it was gold was sorry, DXY was really pushing to the top side, gold was absorbing it all, and eventually, obviously, as I keep saying, it did give way, like everything else, and sort of came to the downside here. Um, that was though this part here was mainly on USD's second push. So the first push, gold, it spiked again, did the same as the Aussie, flashed up here for half a second and then went crash down. But realistically, with the amount that DXY ran, um, gold didn't have its like it wasn't a 1-for-1 ratio of strength of the sell off of the US dollar. Sorry, sell off of gold. I keep mixing up my words. Gotta get over the sickness. But yeah, so basically it absorbed a lot of it before obviously giving way, and now it's bounced back over here. So realistically, go back out to a bit of a sort of further time frame. It's hard to get too excited about gold till you get above this 2040 area. Really, that's what we've been looking at all week, and it's been sold down into, got up here, took out anybody that was short and had their stops above these highs. Very nice for it to do. Comes down here, smashes it, bang here. Again, look, if you can get up 2040 would be nice to see, because this gives us a bit of a sort of hope with it. I'm talking 4 hour close above, time frame wise, above 2040 would be nice to see, but realistically, you need to get above this 2050, because although it's good to break, and like we've attempted here, attempted here, same sort of thing. All week we've been trying to get above this level. We get above here, it's great, but then you've got the next level very close, 2050 above that. So above 2050 will be the major. 2040 would be nice to see, because I think above a close above 2040 on a 4 hour opens the door for a 2050 test, or 2049, whatever, in this upper zone over here. So, you want to, again, you want to get above 2040 with a close, look for a back test above there, go to 2050, same sort of thing. You want to close above here. It's very choppy. That's the thing with gold at the moment. It's just very, very choppy. I mean, look at this kind of stuff. If you want to try to trade a trend, this is not your market for it. You need to get above 2050 in that, and then look for the top side there. There's a lot of talk of it sort of coming down, sort of back towards 1900 even. I've heard some calls with it all. Look, anything's possible. I mean, it still has that gap from like sort of 1830 if you really want to go sort of crazy foil hat on it. But I wouldn't be sort of shorting it, put it that way. So yeah, anyway. And copper, cool. And copper. We got that first little break pushback test here. I was like, oh, look at this. Here we go, copper, boom. And of course, then CPI, it's got smashed. So it has sort of gone up. It's come back down over the side here. you want to break these highs. You want to break these sort of breakout highs. These are the CPI highs over here. A little bit subdued in that at the moment, but it is holding up into this top zone here. So as long as we can sort of stay above, well, realistically, the sort of the lows over here, 78, 378, but I'd say in the short term, if you can stay above 379.35, I'd say you're sort of pretty good to sort of try and pretty much reclaim this range through next week. So this will be our sort of range that we'll be playing with. So yeah, just got to sort of, again, I know a lot of these things are wait and see, but at the moment, after such big news and such whipsaw action, it's hard to sort of really say, look, this is definitely what it's happening. Like I think a lot of people are just going to be a little bit sort of, you know, cautious about sort of what to do next because you saw, there's an idea that US dollar could get back on a run, and as I said before, when US dollar runs, it runs and it doesn't stop. So, sorry, excuse me. So yeah, it's you don't want to be sort of shorting it if it does happen to sort of get back on everybody's radar and everybody's sort of favorite list and start buying it up. But at the same time, they sold into it. They used that opportunity where it was, that was a perfectly good time for them to sort of run it. If they wanted to sort of hammer US dollar, well, high CPI print, that's a good sort of thing backing for it, and you can say, okay, yep, we're going to run that stuff now. So yeah, interesting to see. We'll jump across quickly and just finish off with one, and not really anything of note for one. Like this has just been a very sideways grind area, and as this got here, we've got our little consolidation box. Got a little sort of platform here where it obviously found some support yesterday. I think it's probably more of 1 hour. We marked this off. A close down underneath here. You still got these sort of, the thing with these real grindy things is you can pick out so many levels, and you could say, buys were here, buys were here, buys are here. You can't get once it sort of grinds up one way, there's so many levels for it to grind back down the other way. If you see these things sort of chop through, well, okay, you got something going on, but realistically, I think in the short term, if you're just working off what the most immediate is, it's sort of this sort of 716.5 area, a close down underneath here. Take out those wicks. Would say we're probably going to see a little bit more. So a little bit more downside, I'd say. Short-term stops. We do have a bit of China data sort of coming out today as well. A bit of. It's their CPI. So this is out in 18 minutes, actually. So just a quick look at this. They're expecting, doing very good, aren't they? Almost in deflation, aren't they? 0.5% previously and 0.4% forecast. So I don't know how much you can really trust China data, but we will see. And then with that as well, let me flick it over here so you guys can see as well. So this is USD coming in there. So this is China coming in soon. We've also got the PPI coming out, which is expected for a slight little tick down. And then you've got tentative. I can't say these tentative things, and that sort of it really only seems to be Japan and China that have these sort of tentative releases of data. I like to sort of set times with things. You're not sort of waiting there and going, oh, what happened? Why did it happen? Oh, that's why. You got that trade balance coming in as well, which is expected to sort of tick up a little bit. Even though it's sort of like a low impact marked bit of news, these kind of things by proxy will sort of help the Aussie as well. So if we see that sort of like this comes in, or if it does beat expectations, you're going to see, okay, well, everybody's coming back on board, people are buying more, people are doing more trade, bang, let's tick up. I mean, risk has really been bought up and running hard. I mean, you've got the S&P above 4,800. Dow was hitting all-time highs. Nikkei's sort of, I think it was the highest since 1990 or something like this. So, what I mean, there's a lot of risk that's being bought out there. Aussie has been sort of lagging, so that's worth taking note of because, I mean, particularly sort of just if we jump back on the charts very quickly here and we have a look back at a previous period, look on the daily. This period back over here was a very interesting one because this is also when risk was running very hard and DXY was getting smashed down and made those new lows. This is when you had the start of that big USD run. So it started here in July. And so Aussie wasn't able to put in something replicating the same, i.e. a new high equal to their new low. Best we could do was match to the top here. Same with equities. Equities were pushing up and they were hitting sort of highs. Aussie was unable to make in the new high. So it was, even though risk was running at that time, Aussie was, failing to do the same. And this is what puts it a little bit cautionary here as well, because it's, we're seeing the same thing at the moment. All these markers, all these equity markers are hitting all-time highs. Aussie's lagging. It's not even testing previous highs. I mean, you're not expecting it to be testing all-time highs, but certainly you should be seeing it back up over here around that sort of 68 level. So, certainly need to get back above the wicks, above that 60. You can see how important this 67.30 area is to open it up, to come back up and have another bit of a push and a test up over the top over here. But in terms of sort of daily, at least on this chart, you can see that that wick coming down the bottom here very much brought it back up to get that close up into its little consolidation range. So, again, if you take out the top wick there, then that's going to be your indicator, and that's why we've got that alert there to sort of go, okay, you're coming out of this little channel, then you're going to be pushing back up over here, and you're looking up around that, probably, you could be testing the bottom side of this wick, you could be testing, obviously, the sort of monthly open body, monthly top wick, these kind of figures that we've got up here, but, of course, none of this is going to come till we get over 67.30, and you can see it's quite oversold. This is on the daily, so it's got a lot of things supporting it, but you just need to see that continual sell-off in US dollar. That's the only driver at the moment. They don't really seem so interested in about buying Aussie. They're just happy to sell US dollar, and when they sell it, they'll sell it against everything, and by proxy, we'll get a little bit of a push up over here. If Aussie can turn around, if we can sort of reignite a bit more of a discussion about actually tackling sort of the inflation with the tools at their disposal, i.e. sort of raising rates, well then that's going to help us push a little bit further as well, because we are still sort of two and a bit times the target with inflation. So there's still good reason to think that it could sort of push up a little bit higher there. All right, cool. That's about it from me.